In this week's recap, the markets overcome reaction to the latest Delta variant news. Before I get into the summary of what happened in the markets this past week, the news keeps getting better for Social Security recipients. It is now projected that benefits will increase 6.1% next year, 2022, up from the 4.7% forecast just 2 months ago. That would be the most significant increase since 1983. It's all about inflation. Social Security cost of living adjustments, or COLAs, are based on the Consumer Price Index, which rose 5.4% in June, its largest 12-month increase since 2008. The official announcement is expected in October, and once it's confirmed, the revised payment will go into effect in January of 2022. More than 65 million Americans receive Social Security, and the annual cost of living adjustments are designed to help recipients manage higher costs. At the start of 2021, recipients saw a 1.3% increase. The average monthly benefit is $1,544 for retired workers. So a 6.1% increase amounts to $94 more per month. Now, that might not be quite enough for a car payment, but it's double the 3% raise being given to U.S. workers in 2021. Social Security can be confusing. One survey found that only 6% of Americans know all the factors that can determine the maximum benefits someone can receive. If you have questions or someone that you know, please reach out. We have a number of resources at our fingertips that you may find helpful. So with that, I'm going to go ahead and roll the intro, and then we will dive into this week's update. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Overcoming a COVID-related economic growth scare, stocks moved higher amid a week of strong corporate earnings reports. The Dow Jones Industrials Average rose 1.08%, while the Standard & Poor's 500 gained 1.96%. The NASDAQ Composite Index soared 2.84% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, dipped 0.2%. Stocks staged a broad retreat on Monday as traders worried about the adverse economic implications of growing Delta variant infections. Economically sensitive sectors such as energy, financials, industrials, and materials absorbed the brunt of Monday's sell-off. But the markets did a quick about-face, posting 4 consecutive days of gains and leaving the 3 major averages with fresh record highs. The sharp reversal may be attributable to a buy on the dip investor mentality, the absence of investment alternatives to stocks in this low interest rate environment, and massive financial liquidity. Stocks were also lifted by a healthy kickoff to the second quarter earnings season. So let's take a closer look at that as well. So the earnings season moved into full swing last week, and the results exceeded the market's high expectations. Of the 120 companies in the S&P 500 index that have reported as of Friday, that was July 23rd, 89% of them beat the street's earnings per share estimates by an average of 20.6%. Financials and consumer discretionary sectors provided the biggest earnings surprises, up 28.9% and 24.5% respectively, while materials and utilities delivered the smallest positive surprises, up 5.3% and 2.5% respectively. These earnings beats are leading Wall Street analysts to raise earnings estimates for the third quarter of this year, 2021, through the first quarter of next year of 2022. And then one final thought for you here today. The National Bureau of Economic Research said last week that the pandemic-induced recession ended in April of 2020, officially lasting 2 months and making it the shortest recession in U.S. history. Remember, later on today, I will be emailing out our full weekly economic update that I have right here, hot off the presses. If you're not getting this and you would like it, you can subscribe and get this once a week email at our website. In this update is also our financial tip of the week. We have economic data that we're watching, as well as companies reporting earnings, which is a very thick section this week because it is a very busy week with earnings reports. We have a quote of the week, and we have a riddle for you as well. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.